Your next online order, your essential supplies. Both are at risk from invisible failures. This isn't just about lost packages, it's about a fragile system. We explore the hidden costs when highly automated warehouses designed for ultimate efficiency suddenly collapse. These technological marvels promise speed and precision, but their complex systems harbor vulnerabilities. A single software glitch can trigger a cascade, devastating entire logistics networks. The promise of artificial intelligence and robotics in logistics seemed boundless. Companies invested billions, seeking unparalleled speed and reduced labor costs for your convenience. These massive facilities, often spanning millions of square feet, operate with minimal human intervention. Thousands of robots move products, guided by intricate algorithms, 24 hours a day. Imagine a symphony of machines, perfectly coordinated. This vision captivated investors, driving an automation boom across the globe. But what happens when the conductor loses control? The financial stakes are immense. Your daily life depends on these centers functioning flawlessly. Any disruption quickly ripples through the entire economy, impacting countless businesses. We're talking about more than just a momentary delay. We're examining the deep systemic financial repercussions of these advanced systems failing catastrophically. And I have the receipts to prove it. The industry sells you on seamless operations. They highlight efficiency gains and cost savings. But here's what they're not telling you about the inherent fragility. This isn't just a theoretical problem. Real-world incidents reveal a disturbing pattern of vulnerability. The scale of potential losses is truly staggering, impacting your future. Consider the sheer volume of inventory these centers manage. Billions of dollars worth of goods pass through daily. A single failure can wipe out vast quantities of product. The initial investment in these automated systems is staggering. Companies pour capital into robotics, specialized infrastructure, and complex control software. This creates massive fixed costs. But here's where it gets interesting. The very complexity designed for optimization also introduces new, unpredictable points of failure. This is the critical part you need to understand. Your understanding of these risks is crucial. The costs are ultimately borne by you, the consumer, through higher prices or reduced availability. This mechanism is often hidden. We'll uncover how software glitches, robotic malfunctions, and even human safety issues converge. This creates a new category of liability, one that devastates balance sheets. The official story is one of progress and automation. The real story involves a delicate balance, easily tipped into chaos by unforeseen events. This is the part they hide. Early incidents were often dismissed as growing pains, isolated events, but the data reveals a more troubling trend. These failures are becoming more frequent and more severe. Let me show you the first piece of evidence. In 2019, a massive fire erupted at an Ocado automated warehouse in Andover, UK. Robots collided, sparking an inferno. This wasn't a simple human error. It was a systemic failure within the highly sophisticated grid system. The resulting blaze destroyed the entire facility, costing tens of millions. The fire caused an estimated $110 million in damages and business interruption. That's not just a number, it's a stark warning about the fragility of these systems. Source: BBC News, Feb 6, 2019. This incident highlighted new categories of risk. Traditional fire suppression systems were overwhelmed by the unique environment of densely packed robots and plastic totes. The financial fallout extended far beyond property damage. Ocado's stock price plummeted, and their ability to fulfill orders was severely compromised. Your investments are not immune. The company had to rebuild, incurring massive capital expenditures. This directly impacted their profitability and future investment capacity. This validates your suspicion of high costs. Insurance companies faced unprecedented claims. They struggled to assess the unique risks associated with such advanced automation. This created a new frontier in liability economics. The regulatory landscape was unprepared for such a disaster. Existing safety protocols simply didn't account for autonomous robots operating in close quarters. We'll come back to why this matters. The cost of not knowing these vulnerabilities is staggering. Every day this continues, companies and consumers lose potential value. This isn't prophecy, this is mathematics. The Ocado case was a wake-up call. It revealed that automation, while promising, carries inherent complex risks that were previously underestimated. This is the real story. Your supply chain, the one you rely on daily, is far more interconnected than you realize. A single point of failure can unravel an entire network, impacting your purchases. The push for automation often prioritizes speed over resilience. This fundamental trade-off is now exposing critical weaknesses in our global logistics infrastructure. Now here's where most people get this wrong. They assume these are isolated incidents, but the pattern is always there, repeating across different industries and locations. The myth is that automation eliminates human error. The reality is that it simply shifts the error upstream to software engineers and system designers. This is the critical part. A bug in a single line of code can bring an entire operation to its knees. This isn't a flaw, this is the feature of hyper-connected systems. Let me show you another example. Amazon, a pioneer in warehouse automation, has faced numerous safety concerns and system glitches in its vast network of fulfillment centers. Reports from outlets like The Verge and Reveal news detail worker injuries. These often stem from human-robot interactions gone wrong, or from the relentless pace set by algorithms. Source: The Verge, Reveal News, Various Reports 2019-2023. While not always catastrophic fires, these incidents reveal systemic issues. They impact worker productivity, increase operational costs, and create complex legal liabilities for corporations. The financial cost of these incidents includes workers' compensation, legal fees, and reputational damage. Your trust in these brands is slowly eroded by such hidden failures. The regulatory cost analysis becomes a nightmare. Governments struggle to set safety standards for environments where humans and robots share space. This leaves your safety in question. Stay with me because the next part changes everything. The true cost isn't just in the immediate damage, but in the ripple effect across the entire supply chain. Remember when I mentioned regulatory unpreparedness? Here's why it matters. The lack of clear guidelines means companies operate in a gray area, often prioritizing profit over prudence. This creates a liability void. Who is responsible when an autonomous system fails? The software developer? The robot manufacturer? The warehouse operator? The legal battles are immense. Corporate bankruptcy cases can arise from these unforeseen liabilities. A single, large-scale failure could easily sink a smaller logistics firm. This is not a theory. This is the risk. The insurance industry is scrambling to adapt. Traditional policies don't adequately cover the unique risks of cyber-physical systems. Premiums are rising, or coverage is becoming scarce. This directly impacts your wallet. Higher insurance costs for logistics companies translate to higher shipping fees for you. Every single time you click Buy Now. The investment ROI for these automated warehouses becomes questionable. The promised efficiency gains are often devoured by unforeseen operational disruptions and liability costs. What you're losing right now is transparency. The complexity of these systems makes it incredibly difficult to pinpoint fault, obscuring the true financial impact. The problem isn't just the robots themselves, it's the entire ecosystem of software, sensors, networks, and human interfaces. This is the mechanism they don't want you to see. Consider the cascading effect. A glitch in one warehouse can delay shipments to another. This creates bottlenecks, leading to empty shelves and frustrated customers like you. The financial repercussions are not contained. They spread like a virus through the interconnected global economy. This impacts your access to goods from food to electronics. This is not a bug. This is the design of a system pushed to its limits, sacrificing resilience for speed. The consequences are becoming undeniable. What I'm about to show you is how this vulnerability is being exploited, not by external threats, but by the very nature of its internal design. Old warehouses had human errors, easily identifiable and often localized. New ones face systemic software collapse, impacting entire regions instantly. This is the critical difference. The concept of single point of failure has evolved. Now it's a single line of code, a network outage, or a sensor malfunction that can bring down a titan. The financial models used to justify these investments often ignore these new, amplified risks. They focus on the upside, not the devastating downside. This creates a false sense of security for investors and consumers alike. You are being sold a dream of efficiency, while the nightmares are quietly accumulating. The cost of recovery from such events is astronomical. Rebuilding a fully automated facility can take years, not months, draining corporate resources and market share. Supply chain disruptions are not just inconvenient, they are financially crippling. Businesses lose revenue, customers switch brands, and long-term relationships are fractured. Think about your favorite products. If they suddenly disappear from shelves, it's not always a production issue. It could be a logistical collapse you never hear about. Here's why this matters today. The global supply chain is already stressed. Adding these fragile, complex, automated systems only amplifies existing vulnerabilities. The push for lights-out operations, where humans are almost entirely removed, eliminates traditional safety nets. There's no human to intervene when the algorithms go rogue. This isn't just about robots bumping into each other. It's about sophisticated AI making decisions that lead to massive inventory losses without human oversight. The financial impact of lost inventory alone is staggering. Perishable goods spoil, seasonal items become obsolete, and high-value electronics are destroyed. Consider the reputational damage. A company known for efficiency suddenly becomes known for catastrophic failures. This impacts consumer trust and future sales, hitting your investments. This is the part they don't want you to connect. The direct link between a software glitch and your inability to get a product. The chain is invisible, but real. The mathematical inevitability of these failures increases with system complexity. More lines of code, more robots, more sensors mean more opportunities for something to go wrong. Now you understand why the stakes are so high. The promise of automation is colliding with the harsh reality of its inherent fragility and the financial devastation it can unleash. Corporate giants protect themselves by shifting liability and externalizing costs. Meanwhile, ordinary people like you suffer the consequences of disrupted supply chains and higher prices. This is the silent transfer of risk. Companies reap the efficiency gains, while the public absorbs the financial shockwaves when things go wrong. Sound familiar? It should. The real story is that the drive for ultimate efficiency has created ultimate vulnerability. This isn't just about a warehouse, it's about the entire economic model. What makes this dangerous today is the pervasive integration of automation. Right now, the same patterns are playing out in every sector, from manufacturing to healthcare. A 2022 World Economic Forum report highlighted systemic supply chain fragility. It warned that automation, while efficient, introduces new vectors for disruption, impacting global trade. Source: WEF Global Risks Report 2022. The truth is, these systems are designed to be self-optimizing, but not necessarily self-preserving. Their primary directive isn't resilience, it's throughput. This creates a fundamental conflict of interest. Companies want maximum output. You, the consumer, want maximum reliability. The two are often at odds in automated systems. The financial repercussions are not theoretical. They are quantifiable. Billions lost in inventory, hundreds of millions in property damage, and unquantifiable brand erosion. Let me show you who truly profits. It's not always the companies, but often the solution providers who sell more complex and often equally fragile systems. The cycle repeats. A failure leads to a demand for new, more advanced solutions, which in turn introduce new, more complex vulnerabilities. It's a never-ending spiral. The promise of seamless logistics is a powerful illusion. Beneath the surface, a delicate dance of code and robotics constantly teeters on the edge of collapse. Your financial security is tied to the stability of these systems. When they fail, the ripple effect reaches your investments, your job, and your daily expenses. Before I give you the 3 takeaways, consider this. The future of commerce depends on understanding these deep structural flaws, not just patching symptoms. This isn't just about preventing another warehouse fire. It's about fundamentally rethinking how we engineer resilience into our most critical infrastructure. The choice is clear. Either we acknowledge the hidden costs and build truly robust systems, or we continue to pay the price for unchecked automation. Now you see the full picture. The financial repercussions of automated warehouse failures are vast, complex, and deeply personal to your economic well-being. The first takeaway: liability economics are fundamentally changing. Companies must account for software-driven failures, not just physical accidents. This is a new frontier. The second takeaway: the insurance industry needs radical innovation. Policies must evolve to cover cyber-physical risks, or the burden will fall entirely on businesses and consumers. The third takeaway: regulatory frameworks are critically lagging. Governments must establish clear, enforceable standards for automation safety and resilience, protecting your interests. Infrastructure investment ROI needs re-evaluation. The true cost of ownership must include the potential for catastrophic systemic failure, not just initial capital outlay. This is not a problem that will fix itself. It requires proactive engineering, rigorous testing, and a willingness to prioritize resilience over pure speed. The cost of ignoring these warnings is immense. While you're not paying attention, the vulnerabilities in these systems are growing, threatening your supply chain. Every time a robot fails, every time a system glitches, the hidden cost is passed on to you. It's an invisible tax on your daily life. The future of logistics demands a new approach, one that understands the practical engineering of disasters and builds for failure, not just for success. This is the critical insight you need. It's not just about efficiency. It's about the financial stability of our interconnected world and your place within it. Understanding these mechanisms empowers you. It allows you to see beyond the headlines and grasp the true economic forces at play in our automated future. Share this video if you believe in uncovering the true costs of our technological advancements. Your awareness is the first step towards demanding better systems. Subscribe for more in-depth financial analysis of catastrophic events. We reveal the hidden engineering behind the world's most impactful failures. Join us next time as we dissect another critical vulnerability, exposing the patterns they don't want you to see. Your financial future depends on this knowledge. Stay vigilant. Stay informed. This is not just a story, it's a blueprint for understanding the true cost of progress.